Hi, Jesse. Yeah, it's Yanni here, and here's the video I promised you, just to explain to you exactly how this strategy works. You can see what I've got here is I've got an empty screen here, right? And this is to prevent me from jumping into trades with low momentum, because when you look at the charts, sometimes it looks like there's an opportunity, but the conditions might not be right. In this case, the momentum. Okay, so I call it the 4-hour ghost. So these are my ghost templates. I've got nothing on the screen apart from the two ATRs. So the ATR, if you have two ATRs plotted over each other, it's very useful. So you may know that the ATR tells you the average true range. So it tells you the average movement in pips over a 14 period time frame, or 14 periods, in other words, 14 candles. So I've got the 2 and the 14 there. Okay. So the reason why I've got the 2 is because as soon as there's a change in momentum, I want to pick it up immediately, because the 14 period is way too slow. So if there's a change in momentum, obviously because it's an average of 14 candles, it's going to take a very long time before it will be calculated into the 14 period. Okay, so that's why I use the 2 to show me sudden changes, and I want to see the changes must be, if there's a change in momentum, it needs to break above the 14. Okay, it's the same with when the momentum suddenly drops, you won't pick it up on the 14, like over here, if you, for example, or even here, you can't really pick it up because it takes too long for it to update. So the 2 ATR is very important for me when I look for sudden momentum shifts. And then that's typically when I want to look at the markets, okay? Because again, you don't want to be in the markets when it's very slow or it's ranging and it doesn't want to move. Those are really frustrating times to be in the market. So anyway, that's the reason why I'm looking at this ATR setting. So I've got these pairs open. This is the ones I typically focus on. You can focus on all of them, but it's not really necessary. If there's nothing on these particular ones, I may shift over to something else. Right, so I'm not sure if you're familiar with how to create profiles. So once you've created the different pairs and you removed everything in the background, and you can just do, you go to properties and you change everything to white, okay? And then it will you won't see anything. So that's how you do that. And then you just save the profile. So you go profiles, and then you just type in 4-hour ghost or whatever, right? I call it the 4-hour ghost. You can call it whatever you want. So, and then from here, as soon as I've got that, I immediately also save it as 4-hour ghost remove. Because the reason why I do this is if I go, I've got it already there. Because what I want to do is I want to remove all the pairs where there's no momentum. Okay, and I typically trade at 1600 hours on this IC Markets platform. So the 1600-hour candle, I trade that candle. That's the only one I trade. Okay, because only because that tends to be the time of the day when the momentum is picking up. Okay, and I'm going to show you a few examples of exactly what I do. So once I go to say 10 minutes, say 15:50, so 10 minutes before the 1600-hour candle forms, I'll go through these pairs and I'm looking for pairs where the momentum is picked up, right? So for example, if we look at, let's have a look at this one. Okay, remember it has to be at the 1600 one. So if I just draw a line there, you can see that you can see here, in this block here, that it will show the time. So that was 8 o'clock in the morning. The momentum is very low. The next one is 12 o'clock. So 12 o'clock to 1600, there's momentum. It crossed above this line. Okay, so I just want to look at the date there. It's the 10th of March. So this 12, it shows 12, but remember it's the 12 to 16 because it's a 4-hour time frame. So this is the 12 to 16. So that's the momentum you'll see. You'll see that the momentum has picked up and it crossed above, quite aggressively above the 14. So if we go to the 10th of March, right, and we look at the 1600 candle, I want to show you what I do. Then I call it the daily template, but it's just, it's just the name of the template. But basically what it is it shows me all the indicators I have on here. Okay, so if we go to the 10th of March at 1600, you can see, so there's the 1545 candle, and it closed. So here's the new candle. The new candle is going to, at the 1600, it's going up. But if we just go back to the 4-hour time frame, so the 10th of March at 12, right? You can see it's a very strong bearish candle, and it broke that support level. I will send you all these indicators. That's a support level. It broke right through it. So what you want to do is you also want to short. Okay, you want to go into the same direction of the strong momentum, but you must get confirmation on the 15-minute time frame. So if I go back to the 15-minute time frame, okay, so here's the new candle. It's the new 4-hour candle. It's going up. Now remember, you always have to wait for the 15-minute candle to close, okay, and not while it's busy forming. So what you want to do here is you want to wait for a candle, a bearish candle, that matches with what you've seen on the 4-hour. Now remember, what you have on the 4-hour is you have momentum. So you know there's momentum. You know it's going to move. The momentum based on price action is to the downside, right? So you could see, I showed you the 4-hour candle. It was a very strong move to the downside, and there with a lot of momentum. So you want to trade in that same direction. So this first candle is going up. The second candle is going also going up, but you can see it failed, right? And if you want to, I know you like Fibonacci levels. I draw Fibonacci levels on the 4-hour time frame, but it's just for reference. It's not to make decisions on. So I'm going to go back here and show you what I do. Right, so yeah, if I draw Fibonacci levels on the 4-hour candle itself. So from the high to the low. Okay, so let's go back to the 15. Okay, so yeah. So the new 4-hour candle closes. You can see it's going up. You can see it's rejecting here at the 50% Fibonacci levels, but you do not get in. Okay, even when you see, I'm not sure how you trade Fibonacci levels, but you don't act as soon as you see it's retracing, okay? Because the confirmation has to be on the candle itself. But that's a very good indication that it has rejected price at the 50% Fibonacci retracement level, okay? So it's all about stacking probabilities. You can see the 3 alligators is all in perfect order to the downside, okay? So that tells you there's a clear downtrend. So you've got 3 things now. You've got momentum on the 4-hour. You can see on the 4-hour candle itself, the momentum is clearly to the downside. So you want to trade in the same direction. And then on the 15-minute, you want to wait for confirmation that it's now from this point, it's going to start to go down. Now, I have actually taken this trade. I'm going to show you. There's an indicator called the trade plotter. You can see I've got so many trade indicators that I've used over a very long period of time, but I'm not using any of it really. So trade plotter will show you exactly where you've entered and where you've exited. So I'm going to show you, before I do that, I just want to, well, let me just put it in, it doesn't matter. Okay, right, so there's where I entered, and that's where I took profit. It went way past it. It went, I don't know, a few pips past it, and then it pulled back, and then it went lower again. But what I basically do is, so you see the momentum on the 4-hour, you see the momentum is down, you wait for a candle, a bearish candle to close that is in the same direction of the 4-hour time frame. Okay, so this is it. So it closed there, and there I took profit. Now, how did I manage to take a profit there? Let me quickly show you. And by the way, your risk is just above this 15-minute, the trigger candle. Okay, So that is the candle that gives you the direction, or that tells you, okay, from here it's a very high probability that's going to go down. That is your trigger candle. Your stop loss must be above the high, in this case, of the trigger candle, not over here. That's way too far. This is your trigger candle. So if you look just very quickly, you can clearly see that's your risk and that's your profit. Okay, so that's a decent risk-reward ratio. So that's what you want in all your trades. But I just quickly want to show you how did I determine that take profit. Right, so I just quickly want to delete these. Let's go back to the 4-hour time frame. So at the time, I'm not sure what the ATR was at the time, but basically what I do is I like to take, I don't want to take more than the average price of the candles over a period of time. So I think this one was about 35 or something. I can't remember, obviously. But I just want to explain to you how I take profit. So what you quickly do is you look at the high. Okay, so the high on this candle is 1.28057. You can see it here at the bottom, right, as you know. So the high is 1.28057. 1.28057. And then you deduct the ATR, right? So you say, again, I don't know what the ATR was back then, but let's say it was, say, 35 pips. Then you say minus 0.00035, okay? Minus 0.0035. So your take profit will be 1.27707. So if I just 0.277077, 277,077. Okay, there, bang on. Okay, yeah. So you can see that's where I entered, and there, just based on the ATR, that's where I took profit. You can see it went a little bit further, and then it pulled back. So you should always never try to take more than your average price, that your average price moves. Okay, on the, say, in this case, the 4-hour time frame. Because it's just, you know, if the average price is going to give you, say, 35 pips on a 4-hour time frame, and you try to catch 70, then it's unrealistic. Okay, because you're trying to catch way more than what the average price is actually moving. So that's all you really do. So to calculate your take profit, that's what you do. So you enter when the first crack shows. Your stop loss is right above the trigger candle. And then your take profit is obviously based on the ATR. Okay, and then that's usually you're going to get a 1-to-3 ratio or something like that. Because of the ATR will limit you. Okay, the ATR, you won't get a 1-to-5, 1-to-6 or so, something like that. So that's the first example. I hope that makes sense. And by the way, you can ask me questions. I will record another video for you if you want, based on all the questions you may have, based on the things I just showed you. Okay, so that's that one. I'm going to do one more example for you, just to show you how simple this is. But it's all about trading when there's momentum. Okay, do not trade. Look at this. Okay, so if you look at this pair has got no momentum. 4 o'clock, 8 o'clock in the morning, 12. You see, this is the 12 to 1600 candle. So in the afternoon, when you look at this candle, it will be way low below the 14, so you won't trade it. Now, it could obviously move later in the evening and so on, but don't worry about that. You are specifically looking for pairs that has crossed the 14 before the 4 o'clock session, right? So it just needs to peak above before the 4 o'clock session, and that's when you start to look at the 15-minute time frame. So I'm going to show you another example here. This is the Aussie dollar, US dollar. So what was it? This is okay. So this was on Monday. I traded this one as well. You can see this is 8 o'clock in the morning. The 12 o'clock did peek through. Maybe it doesn't show it so clearly here, but at the time when I was looking at the markets, it did peak above the 14. So momentum is picking up. It's crossing the 14. So I'm interested in that one. Okay, so on the 7th, If you now go, I'm just going to change the template on the 4 hour to look at what it looked like on the 7th. Okay, this is the candle before that formed between 12 and 16. So what you want to do is you want to trade in the same direction of the momentum. You know there's momentum, so you want to trade in the same direction, right? If you trade anything else, like say for example here, you can see that, you know, whatever these candles may look like, there's no momentum, right? So you must look for something that's just crossed above the 14. So again, the 4 o'clock session, and now let's have a look at the 15-minute time frame on the 7th. Okay, so the 7th. So yeah. So this is the 1545 to 1600 candle. Okay, now I have an indicator that draws support and resistance, but unfortunately, as time goes on, it doesn't. It only shows the last 50 candles. But I can probably show you because I have a screenshot indicator that takes all the trades as I take them. So I'm just going to have a look here and show you what it looked like at the time. Okay, so this is what it looked like at the time. 7th of March, Aussie dollar, US dollar. So this screenshot indicator tells me, it takes a screenshot and so I can go back and see what it looks like, because again, when you go back in time, it doesn't really show the conditions exactly as it was at, when I entered. So that's why I use this screenshot indicator. So the 1545 candle broke the support and it closed it closed below this resistance area. Now remember, there's momentum on the 4 hour. The momentum is down, so you trade in the same direction of the momentum that the candle was showing on the 4 hour. Then you go to the 15-minute time frame, and you want to make sure that your entry is spot on. Now, in this candle, the previous example, you could see that it didn't break a support or anything. It was just pulling back, so you were looking for a reversal, right? In this case, it was breaking the support and it closed below. So you can immediately take it. Your stop loss is right above there. Unfortunately, it doesn't show where I took the stop loss, because it just shows you where you enter the trade. Okay, so the 15 so the new candle, that's immediate. You can enter immediately there. And I'm just going to put my trade plotter on here. Okay, you can see there, right? So there's the candle that broke the support there. It closed below. Here's the new 4 hour candle. You can just immediately take it. Your stop loss is right there. Okay. So I want to show you that's where I entered and that's where I took profit. Now that is not a 1 to 3, that's maybe a 1 to 2 or something like that. And again, the take profit is based on the ATR. Okay, you can see it went further. But I don't care about these, okay, because you always have to go with what's happening most of the time, okay, over a series of trades, what's most likely to happen, because you don't want to try to catch a big move where maybe it just goes a little bit below and then it pulls back, and then you regret not taking profit at the ATR. So if we look again at the 7th of March at 1600, okay, the ATR. Again, I don't know what the ATR was back then because it changes all the time. But let's just go with, say, I don't know, let's 27. I'm just gonna go with 27 and see what it looks like. So if you look at the high of this candle was 0.73767. 0.73767 minus 27, so it's 0027 minus 0.0027, and that gives you 0.73497. So if you go 0.73497, it's pretty much bang on that line. You see? So let's go back to the 7th. Okay, so yeah, so the ATR was pretty much bang on. So that's where I took profit. Let me just put that back in. So the trade plotter will show me exactly what I did there, and there you go. Okay, so that's why I take profit, and your risk is always smaller. Okay, because your risk is always based on the trigger candle, no, not above some high or some low. Because if you keep getting stopped out, it means your trigger candle is wrong, and then you need to work on that. Okay, but it's very straightforward in terms of when you should be able to trade. Don't worry about this indicator below here. It's just something I'm looking at the moment. I'm not sure if it works. It's not really part of the strategy. I focus on the ATR. That's the main thing. Right. So, and then once that trade closed, you just go back to 4-hour ghost, and then that's it. You leave it. Okay. And then the beauty about this ghost template or ghost profile is there's no temptations. There's nothing you're going to try to trade outside of your trading plan. You just purely look at momentum. You want to pick up momentum as soon as it happens. Okay, that's the main thing. All right, so that's all you do. So I suggest you open your 4-hour charts, and then do not look at anything here that can be distracting, or volume, or anything like that. It's you're not interested in volume. You're interested in it's starting to move now. The markets are starting to move now. You're out of a range. The problem with volume is there may be volume, but there's not momentum. So just because there's an uptick in activity, it doesn't mean it's going to find direction. It just means there's more volume. And if 50% of them are buyers and 50% of them are sellers, you're still not going to go anywhere. You're just going to get really nasty, spiky ranges. So you want to look for momentum. It's moving. The actual price is moving in terms of number of pips. So the number of pips per candle is picking up. Yeah, that's what you want, right? You want to know when it's starting to move. And that's the only time you want to trade. So this is how I do it. I hope it makes sense. It's all in a nutshell. If you have any questions, please feel free to ask. I'll be more than happy to answer them for you.